Oil theft is one of the threats to Nigeria's revenue projections, and a new figure has been estimated for theft in the first quarter of 2022. Chief Executive Officer of the Nigerian Upstream Petroleum Regulatory Commission, NUPRC, Mr. Gbenga Komolafe, has said Nigeria lost about 434 billion naira to oil theft between January and March of this year. Arise business analyst Chika Mbono joins us to discuss further. Chika, good morning to you. Thank you so much for joining us today. Shall we start with the banks, or where would you like to?
Well, let's talk about the banks.
Yes, and the CBN. Huh?
Yeah, it says can the banks be the rallying point for CBN? And I mean, Nigerian banks have substantially transformed. I used to know at a time when we used to say Nigerian banks were just basically LPO financing banks.
Right.
Once you bring a project that is, tenure is more than 1 year, and there are no immediate cash flows coming in, you find a lot of banks not touch it. But these days, you see a lot of Nigerian banks that are putting a lot of money into infrastructure and similar manufacturing companies that you have lending programs that have substantial moratoriums.
Yes.
And tenors spreading over a long period of time. I don't know that everything boils down to risk. And that's where the partnership with Central Bank and the deposit money banks come into play. Yeah. Because what's happened in a lot of instances is that the Central Bank, in line with its development functions in the economy, has these binoculars that enable them to see earlier or faster than the deposit money banks. Yeah. Because their risk paradigms are a little different. Yeah. Immediate profit motive, but because of the development of the country. And so a lot of times CBN has gone ahead to put money into these projects and then hoping that the banks will support. A lot of companies took the initiative to move to the export free zone. But finance, even at the best moments, is going to be the problem. And that's what the CBN governor, the CBN team is talking about. And you see, everything shakes hands. I'll just listen to your rundown. Everything boils down to foreign exchange.
Right.
Foreign exchange. Now, non-oil export, is where our salvation will lie. Because the oil that used to be the hen that lays the golden egg has been battered by the challenges some of the challenges that have been mentioned. And so even our last GDP report, you saw that oil GDP, the condition of oil, the GDP fell by 26%, while for non-oil export moving by about 12-13%. And so that is where the issue is. And I keep saying that there's this funny relationship we have in our GDP, because oil that contributes a lot to revenue and foreign exchange is just about barely about 10% of our GDP. And non-oil export is the largest portion of it. But the problem why it's not contributing a lot to revenues and foreign exchange is not sweating a lot because of the limiting factors they've had there. And that's part of the reason why the CBN team is pushing this. If you reduce limiting factors, remember when the CBN launched the RT 200, there were about 4 or 5 initiatives there. The first one was long-term financing for them to get infrastructure, equipment, and whatever required to focus on export financing. Second one was working capital required to fund the day-to-day run of those companies. Dedicated export terminals. I think there's one or two other ones that they put in there. And then the exchange rates issue, that if you bring in reply the exchange rate, you get $65 on top, the bet. So we'd love to know from CBN how that has, how people have responded to that. But the issue, I keep saying, for us is our salvation lies not in oil, but in pushing oil export. And that's what CBN is pushing.
Thanks. Oil. You want to talk about the oil theft number? Even the CBN governor has a quote on that. Yeah.
I don't know. Okay. Everything shakes hands, I keep saying. Yeah. The PIA was, when it was written or signed, there was this clause there about for the host community development fund. Yeah. I think 3% of the OPEX, present expenditures of the IOCs, we go to the host communities. Now, look at it is, the oil companies need to what? Invest. Yep. You need to provide them, the communities need to provide them an environment for them to what? Invest.
Yes.
Because the fund are creating to this host community development fund, depending on what? The operating expenditures.
Yep.
If they're not operating, the operating expenditures will be what? Low. Now, why are they not operating? They are closing down because of what? The challenges in the operating host communities.
Yeah.
You saw the Minister of State said the major challenge they have is our pipelines. The pipelines are being broken, and the illegal refineries are set up. So it's a chicken and egg situation. The communities have to make up their mind. But I keep saying, I can't come from here where I am, off my town and then head to somewhere in the Niger Delta to go and start breaking pipes. It has to be that the people who are breaking pipes are in the locality. So they have to understand that the host community development fund is for them, and make a decision as to whether breaking the pipes and getting the oil illegally versus this money that is dedicated to them, the good decision they're going to make. And that's the challenges that we'll face, because the IOCs in Nigeria are all leaving the onshore and moving to offshore. And that's making a major problem for us. Look at it this way. Oil prices are $1 per barrel, and we're crying. One was supposed to be like, happily running to the bank and rejoicing. It's a massive problem. And then add on top of that the issue of subsidy. In fact,
that's what a couple minutes ago. There's 6 trillion. Can we spend 6 trillion?
Issue of subsidy that you also, what can, I mean, it's there. Listen, as the price of crude goes higher, the price of PMS, that's petrol as Nigerians call it, is going to also go higher. So the landed price will be far away from this 165 that was selling it. So the higher it goes away from the 165, the higher the what? Subsidy. So, and all the primary price have been what? Rising.
120 now.
124.
So
it's not, it's not a rocket science calculation. It's just there. It's going to happen. And so when it happens, our major revenue sources is dried up. What happens is our risk cost is what? To go and borrow. You see how everything relates?
Yes.
And then the IMF is saying that when we borrow,
debt service to
revenue,
which is 100%.
100%. No, and I heard the director of budget, who happens to my friend, he said, no, it's not that, it's 76%.
I see that's not high enough.
But it's like the man that was told, your wife just, contributes everything to the house. He said, no. After the $10, she gave me 9. I mean, it's like, So, I'm saying everything is
interlinked.
We cannot meet our OPEC quota because of the insecurities in the region. As a result of not meeting our OPEC quota, we cannot gain from the high oil prices now. In addition to not getting from oil prices, because we can't meet the OPEC quota, the revenue coming in from oil export, we are using again to import what? PMS, which will sell below market price. So on the recovery. And so no revenue is accruing to the nation. And because no revenue is accruing to the nation, we have to borrow to finance operation. And then we have to service that debt. And so the little revenue coming, we are using to service what? Debt. Everything is related. So as 2023 is approaching, as we're going to push, thank God Mr. Peter B has been for labor. We'll continue a process of putting them on the spot.
Yes.
To hear what's going to happen. As we said in this program, 2023 is going to be a very important year for us.
Indeed.
And we don't want any proxy candidates again. We need to hear how
they're going to fix the country.
How, yes.
All right, business analyst Chika Mbonu Chika, thanks for joining us.
Thanks a lot.
Appreciate you.